How's it going, everybody? It's Damon here, and if you've been a subscriber to my channel, you might have noticed I haven't posted a video in over a year. I apologize about that. I've just had a lot of projects and I haven't been able to put my time and effort into YouTube, but I can assure you that now I'm going to be posting every single Monday. And those of you that haven't been to the channel, posting videos about personal finance, entrepreneurship, and lifestyle type stuff. So if you're interested in that kind of stuff, think about subscribing. And that brings us to our first topic, which is 4 reasons why credit cards are absolutely essential. Let's get into it. Reason number 1 why you might want to use a credit card instead of a debit card is because they're a lot more secure than a debit card. Let's take into instance this scenario. If you go to a gas station and you put your card into a pump and there's a skimmer in there, the hacker now has your card information. Well, if you're using a debit card, they can take that to the ATM and withdraw $500 out of your account multiple times until it's zero. The problem with this is when you have cash taken out of account, you don't have access to that money anymore until the bank has completed its investigation. That could be weeks or months before you get that money back. And that can be very detrimental if you have, say, rent or any kind of bills due soon after, because you won't have that cash on hand. Well, if you use a credit card, on the other hand, credit card companies will not hold you liable for any fraudulent purchases unless proven not to be fraudulent. So you're off the hook automatically as long as you give them a call. Because you used a credit card, you'll now have your cash still in your account and you can still pay your bills, no problem. But that also brings me to the point that credit cards offer a lot of protection programs such as car insurance, extended purchase protection, and extended warranties that you can use towards your purchases so that you don't have to worry about the manufacturer screwing you over. And while we're on the topic of perks that cards get, that brings us to number 2. Credit cards earn you free money. Several credit cards, well, the ones that aren't crappy anyways, will offer a rewards program or a cashback program. What this means for you is that you can earn rewards or cashback on any purchase that you make with your card. And a lot of credit card companies actually offer you sign-on bonuses to where if you spend a certain amount in the first couple of months, they'll give you a ton of points to use towards rewards. This can sometimes be worth up to $500 to $800 depending on what it is. For instance, if you use the Chase Sapphire Reserve or Chase Sapphire Preferred and you got the sign-up bonus of 60,000 points, you could use that towards an airline partner and get a trip pretty much anywhere in the US round trip absolutely free. A lot of rewards cards do come with a downside though, and that is an annual fee. However, most of the annual fees on these cards can be offset by the value you're getting from the card. For example, if you have the American Express Platinum card, you're getting about $750 worth of value when it comes to airline credits, hotel credits, Uber credits, all those kind of stuff, while the annual fee is about $450. But aside from the rewards type cards, there's also a lot of different cashback cards which are often free. My favorite example of this is the Citi Double Cash card. This card earns you 2%, 1% as you buy and 1% as you pay. Now, if you're using this for normal spending and you're paying the balance off in full, that's a free 2% in your pocket. $1,000 of spending equals $20 in your pocket free money. There are very few, if any, debit cards that offer the types of rewards or cashback that credit cards do. And when they do offer rewards, they're often piles of crap. Taking that into consideration, let's get on with point number 3, which is credit cards are the best line of defense in financial emergencies. Cash is king when it comes to financial emergencies, which is why it's tremendously important to have an emergency fund, which is 3 to 6 months of expenses in a savings account. However, it has been discovered that only about 30% of Americans are prepared for an expense that is $1,000 that comes up as an emergency. That is terrifying. So what do you do when you have an emergency and you have no cash in an account? Well, that's where credit cards come in. Instead of worrying about being homeless or something, you could just pull out a credit card and use it for the emergency. Now, I don't ever condone using a credit card to get into debt, but sometimes it is necessary if you're trying to get out of a hard spot. What I recommend doing when in an emergency is using a credit card, and then you will have 30 days to get back on your feet and recoup those funds to pay off the credit card. However, if you're not able to pay off the credit card, you can just pay the minimum payment, which is usually very low, and most people should be able to pay that. And that's what's so great about credit cards, because instead of having to worry about $1,000 cost that you have to get somehow in the next day, you only have to worry about the minimum payment at least, which is going to be like $30 to $50 probably. And that brings me to my fourth and final point of why credit cards are absolutely essential, which is you'll never have the credit score you want if you don't use them. Let me explain. A credit score, everyone knows, is a number between 300 and 850 that lenders use to determine your creditworthiness. In banking, they use this grading scale that's A, B, C, D, F, just like school. Respectively, those grades are excellent, good, fair, bad, terrible. Now, the reason why you need to be using credit cards is because you'll never be able to get above a good rating on your credit score. The reason why is because there's two factors on your credit score that account for the upper range of credit scores, and that is number of accounts, age of accounts, and actually, if you want to add a third one, utilization. So when you're only using loans, you can't show lenders that you have multiple different vehicles of debt that you can manage. You're only been managing loans, which aren't revolving debt. Because of this, you're never going to get above a credit score of about 740. That'll be your ceiling, is 740, and you'll never be able to get any higher than that. They also look at utilization, which you can really only have a credit utilization if you have credit limits. Also, number of accounts. I suppose you can have 16 loans at once, which is required to have an 850 score, 16 different accounts, but it's much easier when you have credit cards with just zero balances on them. You don't have to worry about paying those, and your utilization will stay low. Now, the reason it's important to have a high credit score above 740, like 800 or 850, is because it can make a significant difference when you're going to purchase a house. Let's say you have a 740 score, you've never used a credit card in your life, but you have a really great score because you've been good with your loans and such. Well, you go to a bank to get a loan, and they see this, and you're trying to get a $200,000 loan, so they give you, we'll give you 6%. Which is pretty decent, but not the greatest. If you had been using credit cards and you had a score of about 800 or higher, you can go to a lender and they'll say, holy crap, your credit is excellent. Let's give you this loan for 4% or maybe even 3%. Just 2 percentage points on a 30-year fixed mortgage is going to save you $100,000 or more. I don't know about you, but I don't want to pay $100,000 more than I need to. Because of this, your house payment will also be higher by about $200, which you could be using towards saving or putting towards something else. And that is why it's essential to have a large variation of different debt on your credit report so that your credit score can get above a 740. That is the 4 reasons why credit cards are absolutely essential. Now keep in mind that credit cards need to be used responsibly. You shouldn't be carrying debt from month to month on a revolving balance. Otherwise, you'll be paying more in interest than the purchase was itself, and that's never good. Also, when you're looking for a credit card, try to find one with zero interest for 12 to 24 months. That way you can get accustomed to using credit cards and making payments on it without having to worry about paying interest. Just make sure to pay off your balance in full by the time the interest-free period ends. When used properly, credit cards can be an awesome way to protect yourself against fraud, reap rewards, and increase your credit score. If you liked the video, go ahead and smash that like button below, and if you want to see more of my content, go ahead and hit subscribe. I'm Damon, and I'll see you in the next video.